The reopening of our economy is underway, suggesting the low point in this economic contraction is behind us. But the path ahead remains full of uncertainty. A quick update on our observations on where we are and the road to recovery. The COVID-19 news continues to improve locally, allowing a more rapid and hopefully less interrupted pickup in business activity, despite the savage impact of the global pandemic on the jobs market. The contrast in how this will play out in Australia and in many parts of Southeast Asia versus the bleak outlook in North America and Europe is yet to be seen, but the relative mortality rates are stark in contrast. Some of these relativities are being seen in the Aussie dollar, which has been rebounding strongly as our economy reopens and probably reflects optimism for our region and our trading partners. But at the same time, pessimism around the challenges seen in the United States. It's a V shape which matches the stronger iron ore price and arguably shows the decisiveness and effectiveness of government policy to contain the virus. On this theme, we heard from our RBA head Philip Lowe last week and again yesterday that the fall in the infection rates means that their upside scenario, with a more shallow recession and a faster recovery, is more plausible. Unfortunately, even this scenario is still a painful one that will have long-lasting impact on the economy. But looking at the range of possible outcomes, the RBA said that we are tracking closer to the upside than the downside in the chart. In the months ahead, this can be monitored by tracking the unemployment rate and total hours worked, and by seeing how GDP trends. Later today, we get the first quarter GDP numbers, which are expected to show a contraction of about -0.25%. If it happens to come in flat, we could even avoid a technical recession. But there'll be no escaping a huge contraction of our economy in the June quarter, as much as 10%. That number won't be known for another 3 months. However, if the economy and the jobs market aren't improving by September, the government will have the opportunity to direct some of the spare $60 billion from the JobKeeper program to sectors in need. Stock markets are continuing their recovery despite the uncertain impact of COVID-19 and global political tensions, with our ASX 200 tracking the rest of the world. But unlike the Aussie dollar, it's not yet a definitive V shape. Volatility levels here and abroad have been normalising after the roller coaster in March, suggesting some confidence that fiscal and monetary policy can do the trick as the economy gets back into its stride. And lastly, the RBA kept rates on hold yesterday and implied they won't be moving any higher for years to come. So, despite the stress on jobs, it was interesting to see that property prices only fell marginally in May. And, looking at some of the CoreLogic data, regional property fared much better than capital cities, a trend that may be just starting to emerge. And that's the market update from Leveraged.